Hello and welcome back to With Secure. Getting started with mutual fund investments can be a daunting challenge. Where to get started? Which fund to invest in? Etc. In this video, let's figure out the easiest way to get started. Quick reminder to subscribe to our channel With Secure to stay updated with more information from the world of finance. Here's a step-by-step guide to getting started with mutual fund investment. Number 1, understand your investment goals. Identify your objectives. Determine why you want to invest, whether it's for wealth creation, retirement planning, child's education, or any other goal. Risk tolerance. Understand your risk appetite. Equity funds are riskier but offer higher returns, while debt funds are safer but provide lower returns. Complete KYC or Know Your Customer. Mandatory requirement. Before you can invest in mutual funds, you need to complete your KYC process. This involves submitting identity proof, address proof, and a passport online or offline. You can complete KYC either online through a mutual fund website, CAMS, or KFintech, or offline by visiting a branch of a mutual fund house. Number 3, choose a mutual fund. The different types of funds are equity funds, invest primarily in stocks suitable for long-term goals. Debt funds, invest in fixed income securities suitable for short-term to medium-term goals. Equity funds, combine equity and debt. That is index funds, track a specific index like 50/50, suitable for passive investors. Use websites like Money Control, Value Research, or Morningstar to compare fund performance, risk levels, and expenses. Number 4, decide on investment mode. Lump sum investment. Invest a large sum of money at once. Systematic investment plan or SIP. Invest a fixed amount regularly, either monthly or quarterly. SIPs are ideal for new investors to average out market volatility. Number 5, select an investment platform. Direct investment. Invest directly through the mutual fund foundation website. This saves on distributor commissions, leading to higher returns in the long run. Party platforms. We use apps or websites like Trove, Zinoha, Paytm Money, or Kuvera. These platforms often provide a user-friendly interface, research tools, and the ability to invest in direct funds. BATs or DMCs. Invest through your bank or asset management companies or DMCs like HDFC Mutual Fund, ICICI Prudential, etc. Number 6. Start your investment. Select a fund and plan. Choose whether you want a direct or regular plan. Direct plans have lower expense ratios as they do not involve intermediaries. Payment method. Choose your payment method, net banking, UPI, or auto debit for SIPs. Track and monitor. Regularly monitor your investments to ensure they align with your goals. Make adjustments as necessary. Number 7, stay informed and review regularly. Market trends. Keep an eye on market trends and economic conditions that might impact your investments. Rebalance portfolio. Periodically review and rebalance your portfolio to stay on track with your financial goals. For example, let's say Meera, a 30-year-old professional, wants to start investing in mutual funds to save for her retirement, which is 25 years away. She has no prior experience in investing, but wants a simple, hassle-free way to get started. Step 1. Determine investment goals and risk tolerance. Meera's primary goal is to build a retirement corpus. Risk tolerance. Since she has a long investment horizon, she is willing to take some risks for potentially higher returns. Therefore, she is interested in mutual funds. Step 2. Complete KYC or Know Your Customer. Online KYC. Meera decides to complete her KYC online through a mutual fund platform like Pro or Zerodha Coin. She uploads her PAN card, Aadhaar card, and a passport-sized photo. The process takes just a few minutes, and once approved, she is ready to invest. Step 3. Choose a mutual fund. Research. Meera uses a mutual fund platform to explore different funds. She looks at large-cap equity funds that invest in stable, well-established companies. After comparing a few funds, she decides on a Nifty 50 index fund because it offers exposure to the top 50 companies in India, is relatively low cost, has historically provided good returns. Number 4. Decide on investment mode. Systematic Investment Plan or SIP. Since Meera prefers to invest regularly and wants to benefit from the rupee cost averaging, she opts for a SIP. She decides to invest rupees 10,000 per month. Step 5. Select an investment platform. Grow app. Meera downloads the Grow app, which is known for its simple interface and direct investment options. She links her bank account to the app. Step 6. Start the investment. Setting up SIP. Through the Grow app, Meera selects the Nifty 50 index fund, chooses the direct plan, and sets up a monthly SIP of rupees 10,000. She schedules the SIP for the 5th of every month, ensuring her account is automatically debited without her needing to take further action. Step 7. Monitor and stay informed. Tracking performance. Meera uses the Grow app to periodically check the performance of her investment. The app also provides insight and news updates related to her fund, helping her stay informed. Let's do a quick recap. KYC, completed online in minutes. Fund selection. Choose a Nifty 50 index fund for stability and growth. Investment mode. Set up a SIP for regular investment. Platform. Use the Grow app for a user-friendly experience. Monitoring. Regularly tracks her investment using the app. Now, the benefits of following this process are simplicity. By using a platform like Grow, the entire process from KYC to investment was streamlined and user-friendly. Next is no cost. Investing in a direct plan of an index fund means lower expenses, leading to better returns in the long run. Discipline. The SIP ensures Meera invests regularly, taking advantage of market fluctuations without needing to time the market. This approach is one of the easiest ways to get started in investing in mutual funds in India, especially for beginners looking for convenience and efficiency. I hope you were able to follow through the information shared in this video. Do give the video a thumbs up and share it with your family and friends so that they too can benefit from it. And I hope by now you have subscribed to our channel with Sikhya If not, please do so. Your participation motivates us a lot. Thank you for watching. See you in the next video. Till then, happy and safe investing.